Hi, my name is Dana Malone, and I'm a paralegal to Isaiah Bridey at Worth Law Office. And we specialize in cannabis law. We do the business side, we do civil side, and we do criminal. So anything cannabis, we can pretty much handle. So as you may or may not know, Oklahoma is now requiring growers to have a surety bond, a $50,000 surety bond. Over the weekend, many people contacted me, and they wanted information regarding the surety bond, and they had some misnomers about what a surety bond was. Not everybody, but enough people. They didn't understand what it was. Okay, so I thought, well, today we can take and do a video on the surety bond. Now, if you are an Oklahoma cultivator and you have owned your property and you are listed as an owner on the license and listed on the deed to that property, and you've owned that property for 5 years and the deed has been filed with your name on it for at least 5 years, you are exempt from this bond. Okay? No questions asked. So you do not have to obtain the bond. You will have to prove that you own the property. You will have to submit a copy of the deed with your name as the business owner on the license and on the deed. So just be prepared for that. So one of the things that we're going to talk about is what a surety bond is, how to obtain one, where to obtain one, as well as I'm going to give you just a little history on surety bonds. I found this quite interesting while I was researching this. For the history, it says a Mesopotamian tablet dating back to about 2750 BC is believed to be the first use of surety. Over the next several hundreds of years, evidence of the use of various forms of surety and surety bonds exists in Rome, Persia, Babylon, and medieval England. Corporate uses of surety bonds are first known to have existed in the United States and England in the 1800s. The Hurd Act, later replaced by the Miller Act, was passed in the United States in 1894, requiring that surety bonds be posted to guarantee performance of contractual duties for all construction projects involving federal funding. So that's a little piece of history on surety bonds. I know it leaves you with a lot of questions. First question would be, what is a surety bond? A surety bond means, well, a surety bond can be defined in its simplest form as a written agreement to guarantee compliance, payment, or performance of an act. Surety is a unique type of insurance because it involves a three-party agreement. The three parties in a surety agreement are the principal, who is the party that purchases the bond and undertakes an obligation to perform an act as promised. Okay, so that would be the cultivator. The licensed cultivator would be the principal. The surety is the insurance company or surety company that guarantees the obligation will be performed. If the principal fails to perform the act as promised, the surety is contractually liable for losses sustained. So the reason you guys have to have a bond is because in our legislature's infinite wisdom, They think that if you abandon your property or abandon the property where you're cultivating, somebody's going to have to come in and clean it up. And so this bond is in order to pay for that cleanup. I mean, that's as simple as I can put it. So you've got the principal, you've got the surety. All right, and then you've got the obligee. The party who requires and often receives the benefit of the surety bond. For most surety bonds, the obligee is a local, state, or federal government organization, i.e., OMMA is the obligee. So, OMMA is requiring it. The legislature wrote it, making it a requirement. So, OMMA is the obligee. So, you've got the principal, which is you. You've got the surety, which is the insurance company or the surety company. And then you've got the obligee, which is OMMA. Those are the three parties. I'm trying to make this as simple, but I'm also trying to give you extremely factual information. So, what you need to know: in practice, surety bonds can have several variations to their definition, meaning, and purpose depending on the specific bond requirement. There are thousands of different types of surety bonds across the country. Some surety bonds provide coverage for or ensure compliance with local, state, or federal licensing and permit requirements. Other surety bonds guarantee payment of tax or other financial obligations. That is not the case for this specific surety bond. It's not going to pay any taxes or other financial obligations. It's only for the cleanup if you abandon your property or abandon your location where you are cultivating. These bonds are referred to as strict financial guarantee bonds and oftentimes are more expensive due to inherent risk of guaranteeing a payment as opposed to compliance requirement. This particular surety bond that you are required is a compliance requirement. Most surety bonds are issued for a set term, usually 1, 2, or 3 years, or they are issued as continuous bonds. A continuous bond simply means that the bond form is written, so the bond is in force until canceled by the surety company. Commercial license and permit bonds have a statutory amount coverage that usually ranges from $5,000 to $100,000. The official surety bond documents typically include a 1 or 2 page bond form. This is the actual bond contract and includes information on the bonded company or individual owners, the surety company, and the surety agent. It also outlines the obligation associated with the bond. The bond form is typically signed by the principal, you, and made official by inclusion of the surety company's official seal and signature of the attorney in fact. That would be the surety agent, whoever is writing their bond. A power of attorney will also accompany the official bond form. So, that's pretty direct. Who buys surety bonds? Surety bonds are purchased by a wide variety of businesses and individuals across the country. In most cases, surety bonds are purchased to satisfy occupational licensing requirements set out by a federal, state, or local government authority. This requiring party is referred to as the obligee, which is OMMA in this case, and each obligee has a unique bond form outlining the terms of the bond contract and oftentimes referencing state laws and statutes detailing the terms of the bond. These contracts reference state laws and statutes detailing the term of the bond. Surety bonds are required in all states to guarantee compliance and financial terms associated with a license or permit across a wide variety of industries and professions. A business demonstrates its commitment to financial responsibility and commitment to ethical business practice with a surety bond. Common surety bonds required to obtain a professional license include construction contractors, auto dealer licenses or licensee, public insurance adjuster license, credit repair service provider license, private investigator license, mortgage broker or loan originator license, and now we can add to cultivation license for cannabis in Oklahoma. Now, there are many other types of professional license surety bonds. I have a bond. I'm a notary. And so to be a notary, we have to have a bond. And I get my bond every 4 years. And I don't even think about it in between the time I get it and have to renew it. So how does the surety bond processing work? Most people and businesses have no idea what a surety bond is until they are told that they need to post a surety bond. Once you are informed that you or your business must furnish a surety bond, it is a good idea to do some research on the specific bond requirement. You should also start by contacting an agency that specializes in providing surety bonds. Now, because this is such a unique industry, not all, I can't say not all, but you need to be careful who you choose. Because this is an industry that is legal in the state of Oklahoma, but not legal federally. So just be careful. If your gut tells you there's something wrong, find another find another surety company. These agencies are knowledgeable about the various requirements. They typically work with reputable A-rated surety bond companies who offer competitive pricing and can guide you through the process of securing your security bond. As part of the surety bond application, the applicant will usually need to provide basic information on the business and its owners, such as names, addresses, and years in business. The application information may also include employer identification numbers, social security numbers, and occupational license numbers so underwriters can review personal and business credit history. In some cases, business and or personal financials may also be requested by the surety company. There are two other techniques that are commonly used to strengthen a surety bond application and help secure an approval or get a lower premium. These are the use of collateral or co-signers. Collateral in the form of cash or an irrevocable letter of credit from a bank can be deposited with the carrier to be drawn upon in the event of a claim. Similarly, a co-signer with a superior credit history to the owners may allow an underwriter to offer a lower rate for the surety bond. Once the application has been reviewed, either electronically or by surety company underwriters, the submission will be given a risk category and a corresponding premium will be assigned based on the surety company's applicable rate filings. The premium is the price that the applicant, you, will pay for the bond for the designated term. I'm being told that typically in this industry, the rate of the bond is going to be 1 to 2%, and it's going to be based on your credit. If you've got better credit or great credit, it's going to be 1% or they're close to. And if you've got credit that has been bruised, then you might be closer to 2%. So for a $50,000 bond, what I'm being told, now I'm only being told from one surety company, it's going to be between $500 and $750 for the bond. All right, let's see. Once the application has been reviewed, let's see. I think I've already done that. How long does it take to get your surety bond? Getting a surety bond is typically a quick and painless process. Frequently, applicants can be approved in the same day and receive the surety bond the next day. Some bonding companies have simple, user-friendly online quote request forms that only take a few minutes to complete. An applicant will typically need to be prepared to provide basic information about the bond required, the business personal information such as name and address and social security. Now, I'm gonna state here, because this is a new type of bond for our state, it could possibly take longer, and they may need more information from you because this is still federally illegal. So I'm not saying that that's going to play a factor here. I'm just saying it could take a little bit longer. Much of the underwriting is automated to allow for rapid approvals and pricing. In some cases, additional information may be required of the applicant, but this information can usually be sent to the agent electronically. Now, I'm not certain that this can be done electronically or completely done electronically. I believe you will need to speak to people because, again, this is a new bond for a difficult industry. The only place that you may need to wait is when submitting your bond to the obligee if they require submission of the bond and your application documents in person. All right, who does a surety bond protect? Unlike most insurance policies, surety bonds do not protect or provide coverage to the owner of the policy, which would be you. A surety bond is typically written to protect, indemnify, or provide a financial guarantee to third parties such as customers, suppliers, or state taxpayers. In this case, it's going to be to protect the land if you abandon your farm and somebody has to go in and clean it up. If one of these parties is damaged financially by the principal's violation of bonding terms and conditions, then a claim may be filed against the bond. The claim is then investigated by the obligee, and if determined to be valid, the insurance company and the principal are typically liable for any damages up to full amount of the bond. The surety company has agreed to undertake the risk in exchange for a premium paid by the principal. Which surety bond do I need? There are thousands of different types of surety bonds, so you really need to make sure that you reach out to the right people. And because this is such, this is an industry that not everybody wants to work with. You know, there are surety companies, there are insurance companies that will do cannabis law. And so, and I know this for a fact because I refer when people ask. So, and I'm not saying that you should contact me. I'm just saying I do know one, but you can do your own, your own research. If you've got an insurance company that you already deal with, you can reach out to them and see if they are writing it. So I'm not promoting any company. So, okay, how much does a surety bond cost? The premium that a business will pay for a surety bond is a percentage of the bond's coverage amount. The final amount The final amount of the premium is determined by several factors, including the coverage amount required by the bond. In this case, it's $50,000. The type of surety, which is, as we've been discussing, it's a cleanup if you abandon your property, you abandon your grow. The applicant's credit score and the applicant's financial history. So that is the information I have on the bond. And, you know, again, if you've owned your property that your business is located on, and this is for grow businesses only, for at least 5 years, and you are personally named on that deed, and you are on the license, the OMMA license, and you've had that deed for 5 years, or you've owned the land for at least 5 years, you are exempt. Everybody else must obtain a bond. So it was great talking to you today, and I hope I've been able to give you some good information. I'm sorry that this is such a long video, but there was a lot of questions this weekend, and I wanted to make sure that I gave you the correct information. You can reach me at 918-900-0470. I am with Bridie and Associates, and I look forward to talking to you in the near future. Thank you.